this week. Let's start off with the US dollar. We do have the Federal Reserve semi-annual monetary policy report. As we've seen the pace of rate hikes increasing, their intentions to pull back from their current stimulus in terms of their purchases of treasury bonds and mortgage-backed securities. With this specific one, we're looking for them to provide us some further clarity or thinking on when they're looking to withdraw from their stimulus, and also if there are any further hints on the pace of the rate hikes before the end of this year of 2017. Elsewhere, we do have labour market data in the form of non-farm payrolls and the unemployment rate. Should the markets observe a higher non-farm payrolls reading and unemployment rate continue to tick lower, that should only add some further fuel for potential rate hikes from the Fed in the coming months. So if those numbers are to be bullish, then expect the dollar to remain well supported and to continue to strengthen across the board against its counterparts. Looking over in the UK, we do have the PMIs for the country in the form of the manufacturing, construction and services PMIs, which all make up a large percentage of the UK's growth. Having looked at the general analyst expectations, they are forecasted lower across the board, which could dampen the pound's recent strength that we've seen, with sterling dollar specifically pushing through 130 to the upside. Looking elsewhere, we do have the Bank of England's Governor Carney due to speak in Germany and Frankfurt. Now, as we've seen, he's given out mixed messages and signals on his own rate hike or rate thinking. So a couple of weeks ago, he mentioned that now's not the time for rate hikes. But then last week in rhetoric, he said rate hikes could come sooner rather than later, which saw some strength to the pound. So really looking some clarity on this current cloudy situation. Looking over in Europe, then we do have the ECB's monetary policy account, so that will give us some details on their thinking behind their latest rate decision, which was around 4 weeks ago, where they kept rates unchanged and their policy unchanged, no withdrawal of their current QE or their stimulus. So if that, as this is 4 weeks old in terms of this specifically, we're not expecting any change in terms of tone, expecting that to remain quite dovish overall. But there was a recent speech by Draghi last week, which the ECB said was misinterpreted, where he was actually upbeat on the Eurozone in terms of the recovery, but said much stimulus is still needed. But if there's any mention in terms of this account that we're going to see this week, if there's any mention of upbeat commentary for the Eurozone in terms of its recovery and the outlook, then expect the bulls to really continue to dominate for the Euro, and we should see that continue to strengthen across the board against its counterparts. Looking over in the commodity-linked currencies then, with Australia, we do have the RBA rate decision. They are expected to keep rates and policy unchanged at 1.5%, and that is expected to be the case for the rest of 2017. Nevertheless, we are seeing a real shift or change in tone from global central banks in the likes of the Bank of England, the Fed, the Bank of Canada. So let's see if we can see the Governor Philip Lowe change his tone slightly in terms of the Australian economy, which could provide some further support for Aussie dollar. As we've seen a large improvement in the labour market, there are still some laggards of the Australian economy in the likes of high household consumer debt, low wage growth, and also still quite subdued inflation. But nevertheless, keep an eye out for that. And looking over in Canada, we do have labour market data. As we've seen last week, the Canadian dollar was really gaining some ground, strengthening across the board. And with this labour market data, we have seen a large improvement in terms of employment in Canada. So let's see if that can continue to be the case and remain the theme and provide some further support and fuel to the Canadian dollar strength. Other than that, have a smashing trading week and thank you.